Hi guys, Max here, and of course, this is your daily market update for yesterday, the 2nd of June. No, that's wrong. It's the 1st of June. Today is the 2nd. Anyway, how did our first day of the month go then? Well, things weren't brilliantly, and we did see small declines across the board for pretty much every sector, except for, of course, oil and gas companies, which saw another rise. As you can see, it was just red across the board, really. We had consumer defensives do really quite poorly, again, with Walmart, Costco, and Target just dropping a little bit more. We saw small base tech do a little bit poorly as well, while the big tech companies actually mostly performed fine. Amazon was up slightly. Google, Microsoft, and Apple were pretty much exactly where they started, but some other companies fell. Finally, in the old world industries for financials, healthcare, real estate, industrials, everything was down. Again, the only sector which actually saw really strong performance was energy, with most companies rising by something like 2 to 3% for the day. The S&P 500 then finished the day falling by 0.75%, and the Dow Jones had fallen by about 0.5%, and then the Nasdaq was pretty much on par with both the others, falling by 0.7% as well. How did the rest of the world do then? Well, it was also a similar story, slightly a mixed bag, but for the most part, stocks fell. The FTSE 100 was down by about 1%, as was the Stoxx 600. Equities in general are just struggling a little bit with this change in monetary environment, with inflation remaining so high and with almost no good news every single day. As a result, then, the MSCI World Index fell by 1.8% for the day. Really nothing to write home about. Now, currencies have gone back to their usual stick of the dollar strengthening as a safe haven asset, with most other currencies falling. The dollar spot index rose by about 0.5%, and the euro and the pound fell by about 0.8% each, with the euro now sitting at about $1.07 and the pound back down to $1.25. What happened with fixed income assets then? Well, actually, we saw more outflows away from the bond market, with yields rising. The US 10-year Treasury yield rose by about 9 basis points and now sits on the cusp of 3% once more at 2.93%. The German and British 10-year yields rose by 5 and 6 basis points each. So a similar story again, with yields rising and prices falling and outflows from the bond markets despite the fact that equities fell. Now, as for commodities, what happened over there? Well, oil prices were actually a little bit lower today than they were the day before. WTI crude oil fell slightly and is now sitting at $113 a barrel, with Brent crude at $114. Of course, that is a few dollars a barrel less than it was just a couple of days ago, but that's still comparatively a very, very high figure, and nothing good about that. Gold then saw a slight increase by about 0.5%, and it now sits at $1,855 an ounce, maybe returning to that safe haven sweet spot. We're really not too sure what's happening with gold. It hasn't really been performing as most people would expect it to. Finally, then, for the crypto markets, what's going on? Well, as you can see, it was pretty red. It was a pretty poor day. Bitcoin had made some gains the day before yesterday, but it lost them all yesterday, falling by 5%, now sitting just below $30,000. Ethereum had the exact same story. It made gains a couple of days ago, but it now has fallen way back down below that $2,000 mark, now sitting at about $1,800. Altcoins saw the exact same thing as well. Declines on average of around about 10% for the day. Really nothing to write home about. I think the only green you can see here die is a stable coin, so that's really nothing special either. So if that's what happened, then why did it happen? Why did stocks fall for the most part? Well, we got two real pieces of data which have sort of shocked investors a little bit, and it's not too good news. The first is that job openings did decline, which is surprisingly enough good news, but there are still far too many jobs when you compare it to the number of unemployed people. And then the second piece of news that we got out was that the US manufacturing index actually rose. US firms are making more stuff, not less. They're doing better than we thought. And you might think that that's good for the economy, right? Well, yeah, it would be if inflation weren't knocking on the door of 10%. The focus right now is slowing down growth, stopping companies from expanding, stopping people from getting employed. Really, growth is a bad thing right now. A weaker economy is, strangely enough, sort of better for the stock market right now. But unfortunately, the data we got yesterday wasn't a weaker economy, it's a stronger one, which is adding fuel to the inflation fire, and that's scaring a lot of investors because it means the Fed is going to have to go harder to change things in the future. Outside of that, then, we did have some news regarding Meta or Facebook. I still like to call it Facebook, but I don't know how long that's going to last. Meta is slowly growing on me. Well, their COO, their Chief Operations Officer, has announced that she's going to be stepping down after 14 years with the company. Now, she is called Sheryl Sandberg, and she is going to remain on the board for Facebook. But the COO is an incredibly important role. In many companies, it's far more important than even the CEO. They can manage all kinds of operations, pretty much the business itself, whereas the CEO usually does, broad-based direction type stuff. So yeah, this is a little bit worrying to investors. She's brought the company into the forefront of social media and technology over the last decade. She's incredibly valuable, and so no one really knows what's going to happen next. This has been anticipated for a while. There have been rumors that she's going to be leaving, but it's still not great timing, what with the monetary environment being so bad, and with Facebook having such a bad name at the moment. As a result of this, Facebook's share price fell by about 2.6% on this news itself. Is that an overreaction? Well, it does seem like quite a strong reaction to something that has been predicted, but maybe this goes incredibly wrong. Maybe she really was totally integral to the success of the company, and maybe she's completely irreplaceable. It's a little bit hard to say right now. Now, talking about Facebook, and in particular the fact that they've rebranded to Meta, well, they are also planning on changing their ticker symbol to Meta as well, really putting that rebrand in full swing. Now, another cause of concern for a lot of people surrounding this change of Cheryl leaving the COO role is that actually she managed advertising. And advertising isn't just important to Facebook, it's important to the firms that use it. And changes are often very worrying. There have been $100 million companies whose entire business model ran around Facebook ads who were just devastated overnight when the algorithm changed. And that could be something that happens into the future as a new COO is appointed. And that's a little bit worrying for certain people. This is also probably going to have quite a large impact on the next US presidential election. Again, Facebook ads were hugely influential during the past two elections. And with the CEO who runs the strategy for those ads changing, well, we don't really know what direction things are going to go in. Maybe they'll crack down with fact checking and truth and fake news and things like that. Or maybe they'll go in the opposite direction and try to maximize revenue. Again, we really don't know what direction Facebook is going to move now. Now, I have seen just a couple of people mentioning the fact that Cheryl had been accused of using Facebook or Meta's resources to try and hide a news story about one of her ex-relationships. Personally, I don't really know if anything ever came from this. I don't know if it was ever legitimate in the first place, but it came up for a little bit and then it just fizzled out. And really, I don't think that her leaving this role has anything to do with that scandal. Now, the next big piece of news that's actually quite good for once is that Biden might be going to visit Saudi Arabia. Basically, he's going to go and speak to a couple different oil producing nations, in particular Saudi Arabia, and try and get them to produce more and export more oil. Obviously, oil and gas prices being very high and petrol gas or gasoline, I think you call it in the US, being very high is awful for his presidency, and it's absolutely awful for his approval rates. So he's actually finally doing what he can to see if he can make a change here. This is actually quite good news. This is the kind of stuff a president should be. He should be proactive in trying to improve the state of his country. Hopefully this meeting that he has is productive. To be honest, I suspect that it's much more important what happens behind the scenes between his administration and the Saudi administration. He isn't exactly a great politician right now. He's not totally there all mentally. I'm sure we're all aware of that. And he doesn't exactly have a good relationship with the Prince of Saudi Arabia either. He did come out and call him a killer for the murder of Khashoggi, which is true. That is factually correct. But geopolitics is an incredibly complex thing, and it's incredibly undiplomatic to say that, and unproductive too. Now, of course, some people will not like this news that Biden is trying to sort of nurse relations with Saudi Arabia. Many people think that we should just cut them off. We don't like how they live. We don't like their ideals or the way they run their government. We don't like the fact that the Saudi Arabian prince ordered the murder of a journalist. And all of that is very true. But as I earlier said, geopolitics is incredibly complicated and nuanced, and the simple fact is that Saudi Arabia produces a hell of a lot of oil, and if you're trying to get them to do something for you to increase more oil and drop the price of it, which will cost them money, well, you're going to have to play the game a little bit. Next for today, we have Elon Musk in the news once more, this time getting quite a lot of flack, quite a lot of negative attention for coming out and saying that basically he does not like remote work and Tesla employees must work in the office. Now, he put out two emails to an awful lot of staff in his Tesla company about this, and they got leaked. Of course, they did. And so everyone's kicking up quite a big stink. To be perfectly clear, the details aren't entirely clear themselves. The first email that he sent was titled and directed only at executives, and then the second one to everyone at the company. But of course, not all 20,000 employees even have an office. Many of them work on a factory floor and things like that. So in my opinion, it really isn't too clear what Tesla's actually policy is going to be going forward with this. I will be putting out a full video on this, hopefully in a couple of days, maybe out on Saturday. Finally, then today, another quick thing about Jamie Dimon, the long-term CEO. He's basically an institution of himself, and he runs JP Morgan Chase. He is an incredibly successful financier, one of the most influential figures in finance in the world right now or ever. And he came out yesterday and he spoke for an awful long time. And he basically said that there is a hurricane coming and it's threatening the economy as the economy is faltering. Basically, he's screaming the recession warning bell. This is equivalent to Bill Ackman's hell is coming thing, though hopefully without any sneaky short positions on the other side. Again, there will be a full video out on this later today because actually he says some really worrying things. Really quickly then, before we end, it is the Jubilee weekend here in the UK. We are celebrating a 4-day weekend. Most people will not work for 4 days as we have bank holidays, just days off really. To celebrate the Queen's 70th anniversary of her reign. I am going to be going to visit my parents down in Devon, so I'm not going to be in my study. I will still be working Thursday and Friday, yay me. But then Saturday and Sunday are probably going to be a little bit light. I will hopefully still get out a couple of videos, though they might well be not in my study, maybe just me on a beach holding a camera. So hopefully all is well, and hopefully I can still get something out for you guys. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. They can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, a site that allows you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you think that crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.